NerdWallet pulling back today after reporting results last night. Revenue came in better than expected, but was down 5% year over year. The company citing a tight lending environment. For more on the report and what he's hearing, let's bring in NerdWallet founder and CEO Chen. Tim, good to see you. So the demand for loans in this environment and really just the willingness of lenders to lend out to certain demographics continues to play out. How is it trending?
Yeah, thanks for having me back, John. Yeah, definitely proud of the team for exceeding revenue and profitability guidance during the first quarter. But yeah, like you said, the lending environment is tight. I mean, we've got elevated interest rates. We've also got banks seeing higher delinquencies. They're elevated levels in areas like credit cards and auto loans. So some natural inclination to be a little more conservative there. And that's really putting a headwind in terms of our lending business. We're really thinking about investing through the cycle, growing cycle to cycle, though. So definitely putting investment into product as the headwinds remain pretty tough.
And your business, a big part of it is putting consumers together with those who are offering financial services. One of the big stories of the year has just been these higher insurance premiums. What's happening in your insurance business, and to what extent does it reflect that? I guess as consumers are probably looking to comparison shop on these rates.
We've certainly seen a ton of interest. I mean, people are getting notices of insurance premiums going up a ton. It's pretty widespread. I mean, just for some quick context here, inflation, the cost of replacing a car, the cost of buying a new car, the cost of fixing your home has all gone up, and insurance companies haven't been able to keep up with those price increases. And so, yeah, the market's been pretty tough. We are starting to see a recovery. The insurers really started turning it around in terms of some of their core profitability metrics in Q4 and Q1, and that market is starting to open back up. So we had a record quarter for insurance in Q1, up 5% year over year. We've been investing through the downturn and feel really well positioned to take advantage as the market comes back.
Tim, you're talking about tightening underwriting standards and the fact that banks and other lenders are pulling back on some of that. Is that sort of the sole reason that you're seeing some softness in that part of the business, or are you seeing some signs that consumers themselves are pulling back or belt tightening themselves?
Yeah, I think it's more driven by the appetite from lenders. So it's a combination of both balance sheets being a little bit strained coming out of the regional banking crisis last March. In some cases, we have lending partners who don't want any more customers, right? Even though they're very profitable. And then in other cases, it's really more that just tightening around the underwriting box. So we think that's very normal cyclical dynamics and that it'll play out over time. The leading indicators I would look to are things like consumer delinquencies. You had several credit card companies call out that those are starting to peak or have already peaked. And that could be a leading indicator that things will loosen throughout the year.
How aggressive are you prepared to be in SMB products and business credit cards here?
Yeah, SMB it's a very important area. I mean, we have so many small business owners in America. Their financial decisions are just as, if not more confusing than consumers. Taking out a small business loan is a huge financial decision, probably the biggest one you'll make in your life, right? So we help people figure out which loans to take out, what their options are, and we help them when they need to renew. But we've also expanded into areas like checking accounts, credit cards, picking software, even payroll providers, how do you accept credit card payments? And that type of stuff, I think, is very important information for making informed financial decisions.